Good morning, everybody, and welcome to this week's installment of the Net Lease Beast Weekly Recap, where we look at the top 3 stories affecting the net lease real estate market each week. Our first story of the week is a New York Times article about the 1031 exchange, which is a headline that many net lease investors are tracking very closely right now. The reason this is so important to net lease investors specifically is that on average, roughly 60% of 1031 exchanges in the U.S. involve single-tenant net lease properties. The proposed $500,000 gain cap is designed to generate more tax revenue that the wealthy class is allegedly holding on to, which acts as a benefit to the wealthy and a detriment to the average worker. The proposed amendment is expected to generate $19.5 billion over the next 10 years and help pay for the $1.9 trillion stimulus afforded to the lower and middle class Americans. Advocates of the 1031 exchange argue that 4 out of 5 exchanges are performed by individuals whose incomes do not exceed $200,000 per year, and the median 1031 exchange transaction value between 2010 and 2020 was only $575,000. So the change would disproportionately hurt your average real estate investor. Reports show that this change would trap capital and stifle investment into lower income communities. A study by Ernst & Young showed that the current 1031 exchange structure will generate $7.1 billion in tax revenue in 2021 alone by supporting the 710,000 jobs that support 1031 exchange transactions like insurance, title, inspection, brokerage, and appraisal companies. So now Jack in the Box, along with many other QSRs this year, has revealed a sleek new prototype design called its Restaurant of the Future. These new model stores are projected to reduce costs by 18 to 23%. Jack in the Box, of course, is prioritizing its drive-thru experience as well, since these new stores have no in-store dining. The stores are 1,300 square feet and have a double drive-thru lane, one designed for regular ordering and one for online pickup. This new concept will allow Jack in the Box to be more competitive with its site selection by fitting more stores on smaller square foot sites. Jack in the Box currently has over 2,200 locations, and the company has said on several occasions this new design will allow them to add another 950 to 1,200 locations in existing markets. Comp data provided by Crexi has shown in recent years average cap rates for Jack in the Box sales hover around 5.25% with an average price point of $2.1 million. Finally, Applebees, the sweetheart casual dining restaurant with 1,600 locations, recorded its best March and April of the company's 41-year history. President John Sawinski said that guests were staying longer, drinking more, ordering more apps, and tipping more generously than they had in the past. Sawinski believes that sitting down and enjoying a meal with another human being is very important to guests right now, and that's being reflected in their business. In addition to in-store dining, Applebees says that 1/3 of its recent revenues come from off-premises sales. Other revenue streams like its virtual concept, Cosmic Wings, and ghost kitchens are gaining popularity as well. This is a much different story than we heard in 2020 when the brand's revenues fell by 35%, forcing Applebees to cut back on the menu significantly. New in-store features birthed from the COVID-19 pandemic like QR code menus, sanitation stations, and geofencing technology that notifies the store when a takeout customer has arrived have proven popular and could be permanent staples going forward. Like many full-service brands, Applebee's net lease investment sales have taken a hit as not many transactions have taken place in the last 15 months. Like we discussed in our last video, cap rates for casual dining have risen 82 basis points since the pandemic started, with cap rates averaging 6.15% for corporate locations and over 7% for franchise guaranteed locations. For more information on these stories and many more, visit netleasebeast.com. Subscribe to our weekly newsletter where I personally put these stories and more into your inbox along with a few other treats. You're also welcome to reach out to me directly if I can help you regarding any of your real estate needs. That's all for today, and we'll see you next week on the Net Lease Beast Weekly Recap.